Hi guys, thanks for joining the webinar. We will wait for a few minutes. Let's others join. We will start. How are you guys? I hope everyone is fine. Hello guys, sorry for late. Due to internet connectivity, I was having problem. Today's webinar is on importance of personal finance. Everyone knows how personal financial planning is an important part in our life, but we don't focus in our finance, or we do not focus, or we do not manage our finance as per it's required. So today I will give you a brief idea how what is personal finance and how we should manage our finance to achieve our goal. Personal finance is nothing, it's a step by step approach to get our goal or to one's goal. It might be a family goal, it might be a personal goal, any goal. Okay. uh, the plan or the financial plan acts as a guide. The plan which we are creating for our finance or personal finance, it will act as a guide and it will go through all our life. Yeah, everyone knows as it is essential in our daily to daily life. So as I told you about the financial planning is a step to step approach to meet life goal or might be personal goals or family goals. Okay, I will give you a brief discussion on that. We will learn about what is financial planning. After that, how inflation impact our lives and to the economy, how and what we need to have a saving habits and how we can manage our personal planning. After that, we will know about different investment options. After that, we will know different kinds of risk management. What are the different type of risk in building a portfolio? What are the different type of invest, where the risk should be there and how we should manage those risks, we will know, and different type of options in this today's webinar. At last I will show you some portfolio and we can just know about the different plannings. Okay, so coming to the personal finance, we need to know what is personal finance. In simple, personal finance or is the financial management which covers the concept of managing like savings, investing and expense. These three things, expense, saving and investment, all together is called as a personal finance in simple words. So inside that we will get different kinds like budgeting, banking, insurance, mortgage, investments, retirement planning, tax and estate planning. So I will just give you a brief idea. What is budgeting? Budgeting is the process of creating a plan to spend your money. How we are spending the money, the proper idea or the process will be giving in the budgeting. Same banking banking is an industry which handles the cash, credit and other financial transactions. Insurance, it's an arrangement made by a company which guarantee of compensation for a specified damage, loss or illness, or it might be death, while they will pay us as a term or as a specific premium. Retirement plannings. Retirement planning in the sense we need to plan for our retirement. Why? Because we are having our health, we need to save money for our future, for our livings. All those things we need to plan from today itself, or it will be late. When it is like retirement, we don't have at that time, we don't, if we don't have money, then we will be smashed. We don't have anything at that time, we will be go out. And this tax and estate planning. Tax, everyone knows, tax is the mandatory fee or financial charge levied by any government on an individual or an organization. Estate planning, it's not real estate. Estate means all the money and property owned by a particular person or family is called as estate. If you are planning on a real estate, it might be agriculture land, it might be a home, it might be a office. If you are buying or if you are having, that is called a real estate. But normal estate means all the money or property owned by us or a single person. Why financial plan is required? Financial plan is required to get our long term goal, short term goal. What do you mean by long term goal? Long term goal, it might be to build a house, your dream house. It might be a long term goal. Short term goal means if we want to do any course, if we want to own a bike, then this will comes under a short term goal. So to achieve those goals, we need to make our financial planning so to achieve those goals. Like if we don't have any money, then we can't buy the home or we can't buy a bike. So to buy a bike also, we need to make a proper plan. So from the savings we can buy the bike, or from the investments, or from the dividends, or from interest. These are the different perspectives from which we can achieve our long term and short term goals. And by using the financial planning, we can secure ours and our family future. How? Means we can achieve our goal, we can have our home, we can achieve financial freedom, so that there will be no problem in life. Okay. Unpredicted events, if any unpredicted events like marriage or birthday events are coming, so for that purposes also we need some finance, or we need some money to achieve those events, or to attend those events, or to uh, create the events. Okay, so for those also we need some finance. And for family future protection, like for, let's think you might be single now, but in future you will be married and you need to take care of your parents, all those you have to take care. So for that we need to create a family protection plan or health insurance, all those things we need to create. So we need to consider those kinds of things in the financial planning. At the end, everyone knows peaceful retirement life. If we earn money, we can save money, and after at the end, if we are having lot of money while we are retired, then we will be happy, and our lives will be happy, and we will live peacefully. Let's know what is inflation. Inflation is Inflation is when average prices in the entire country go up. Means, let's take an example. Uh, let's think today's a price for a product is 100 rupees. If inflation happens, then for next year it might be 2% or 3%. Let's assume 2%. Then in the next year it will be 102%. But what will be our, if it might be a salary, let's take an example of salary. If you are having 100 rupees today, if we want to buy that product, we can buy that at 100 rupees. But if inflation happens next year, then it will go to 102. But our, if our salary will not rise, then we can't buy that product, which is 102 rupees. So due to that, we need to have a proper investment plans, or we need to beat the inflation to achieve our goal, or to achieve our lifestyle. Okay. After that, inflation will be effect on these few factors, like debtors and creditors, investors, fixed salary class, producers, middle class, savings, employment, and tax. Let's think of investors. Investors will have two kinds, like one will be have short term investment, one will be have long term investment. In short term investment, I will not give you any example of investment, just I will give you a idea what is investment. Okay, if you are investing on home, let's take an example. If you are investment on home or any agriculture land, today the price is 1000 rupees. Let's take the price of the home or the agriculture land is 1000 rupees. But after few days or after few years, the price will rise, maybe 10% or 15%, it might be 50% also. Okay, for that, we will, if we are selling that after 5 years or 10 years, then we will achieve some profits, like we may get 10% or 15%, or might be 20%, or might be higher than that. Okay, in that case, if we are having the same thing at 1000 rupees, if we are getting any 50% after 5 years, then we are getting profits on that investment. And fixed salary class, fixed salary class, as I told you the example about 100 rupees product. Fixed salary, if you are getting this year 100 rupees, similar wise if you are getting 100 rupees next year, then the salaried person can't afford to buy the product or buy the goods at that price. He will struggle to buy that product. So he or she should have a proper investment plan, or some investments to achieve, or to beat the inflation and to have a healthy life, healthy and happy lifestyle. Producers, anyhow producer will be get good on inflation, because if the demand rises of the product, let's assume in corona the sanitizers product rised heavily, so the producer who is producing the sanitizers, they got higher money, so here they are getting higher money than they have thought. Similarly, middle class, as I told you about fixed salary class, middle class also facing, if any inflation happens, then middle class also will fall on this category. So they will also face many problems, like if they can't afford to buy the product or services, they will have face some problems due to having some proper or improper financial plan. Savings, all are saving money, it might be in bank or it might be any other form. Then in that case we are getting 2.5 percentage per year or annually. As I told you about the inflation happens for 2 percentage, then if we are getting 2.5 percentage from bank interest, or we can think as a interest, then we are beating the inflation of 0.5%. How? Because we are getting the profit of 0.5% than the inflation. So we are beating few, as we are planning for the financial. So as per the financial planning, we are getting few money in that savings. Similar was employment. If the rise of demand will be increased, then the employment will increase, but it will not for the all the time. Let's think in the corona time that like staff nurse, staff assistants, those demand were increased, but only for few days. They have taken it for 3 months to 6 months. After that, they have been removed. So due to inflation, this will be also problem. Like we will not have a proper employment. If employment happens also, it might be for few days or few months. After that, same condition for the employment. Okay, so we need to know all those aspects before investing or before creating any financial plan, so as to create a proper and adequate planning on our finance. So I will say you about a saving habit which will give you a better outcome in the future. As everyone knows, slow and steady runs the race, so we need to start saving money in any form. It might be in bank, it might be in any investment form, but we need to save to beat inflation. Okay, so this is the different rule. Just I will say you about, like pay yourself first means what we are doing. Let's assume we are getting salary, it might be 20,000. Let's take an example of 20,000. Okay, if you are getting 20,000 salary, then what we are doing on that, we are just investing in house rent. It might be house rent, electricity bill, water bill, utilities, all the things we are using. Like it might be 10,000 we are spending. After that, we are spending for shoes, dress, new cosmetics for 5,000, and remaining 5,000 we are using it for like our dinners, lunch, and for our happiness, or for some travels. So at the end, while we are seeing our savings, it is zero. Then what happens? How much we are earning, we are spending that much. Like if we are earning 20,000, we are spending 20,000. In that case, we are not having any kind of savings. Okay, so what we are doing at the time, we are spending for others, means we are paying to others. Okay, so we should not do that. What we should do, we should save it for us. It in the sense, we let's take, it might be a course, we are taking a course, might be for investment, it might be for mutual funds, or it might be anything, it might be digital marketing, trading, anything. If we are investing on any course, then it will help us to achieve our goal, or it might help to earn few bucks or money. Okay, so I will just give you a clear idea on 70 by 30 rule. 70 by 30 rule is a rule where, let's assume we are earning 10,000 of money, or we are earning sorry, we are getting salary of 10,000. So what we need to do, we need to invest, or we need to keep, or we need to save 30% of that money, or 30% of our salary, to build the wealth. Build the wealth means here money will work for us. Okay, we will not work for money, money will work for us. Okay, so and remaining 70%, which is 7,000, we can use for our needs and living expenses. Okay, remember this one, and you can change it to 50 20 30 rule also. In 50, which will comes under needs, and 20 comes under living expenses, and 30 will comes under building our wealth. Okay, 70 in the sense needs, like home rent, it might be utility bills, it might be phone bills, it might be dinner, all the things we can implement in the 70% of the funds, and remaining 30% we should bound to invest to beat the inflation in the future. Okay, and second thing is active income and passive income are there. Mostly I think your earning income is only the active income, but if anyone is investing in shares, investing in mutual funds, or investing in golds, if anyone is investing in any other form of investments, then that call as passive income. Okay, or it might be a rental activities. Rental activities means if you are having a home, you have given it a rent, or if you are having a shop, you have given it for rent, then you will get monthly payments, which you will get a rental income. Okay, that is called as unearned income or a passive income. Similar wise, you can trade and you can invest that income to get the passive income. This is the different like investment options. I will show you in this mind map. There are different type of investment options. One is long term, second is short term, and third one is retirement plan. In the long term investment, there are two kinds, like income assets, growth assets. In income assets, it will be fixed one. Fixed one in the sense, let's assume if you are depositing in bank and you are saving money, then they are providing 2.5 to 3.5% of interest annually. Similar wise, in this income assets, you will get a fixed interest or fixed profit. We call as fixed profit. Okay, let's take an example of PPF. In PPF means, in PPF we are getting 7.1%, and which is PPF is called Public Provident Fund. Similar wise, EPF also is there, where we will get a Employee Provident Fund. Okay, here we are getting 7.1 percentage. If anyone has invested in PPF, and the annually the rise will be of 7.1%. So anyhow, we have beat the inflation at the current situation. How? If you will think, then 2% is, let's assume 2% is the inflation. We are earning like yearly 7%. Then 7 minus 2 is 5%. We are saving 5%, or we are having 5% to expense, means to for our lifestyle, or to use in the future, or to achieve our goals in future. Okay, similar wise, tax saver funds are also there. Like it is locked for 3 years, which give us 15 to 20% interest, but we can't get, means we can't sell those tax saver fund before 3 years. It will be have a lock-in period of 3 years. Similar wise, we are having NSC. NSC means, guys, are you able to see the mind map? As I told you about the different long-term, short-term, and retirement plans, these are the different plans which you have to plan next onwards. Like it might be 1 month or 5 months or 6 months, but you should plan to beat the inflation. If you will not beat the inflation, then when after 2 years or 3 years, you will not have any savings in your pocket or in yourself. So every time when you are planning, there should be some long term, there should be some short term plans, and retirement plans. These all plans you should have in your mind, and you should create a diversified portfolio to build a proper investment, and to get a proper growth in the, or you can get a proper lifestyle. Okay, so as I told you about the income assets, here you will get like limited, or we can't limit it, it will be a fixed interest. As I told you, for PPF it will be 7%, and for tax saver funds it will be for 15 to 20 percentage. Similarly, NSC means like National Saving Certificate. In that you will get 6.8%. NSC is for 5 years. It is like savings in the sense, normally in savings you are saving in the bank as in your name. Similar wise, you will write a bond in a NSC certificate. You will have some, like it might be 10,000, it might be 5,000, it might be more. You will deposit that and you will get a certificate on return, for which you will get yearly 6.8 percentage profit or interest. Similar wise, we are having a growth asset. As I told you about the income asset, another one is growth asset. In growth asset, we are having mutual fund, ULIP, investment in shares, and bonds. First, talk about mutual funds. Mutual funds are the funds, these are the investment categories. Like it is a what we call instrument. We call it a instrument. Like everyone knows our share and share market. Similar wise, mutual fund is a instrument through which we can indirectly invest in the shares or bonds or the equities. Okay, so in the mutual funds there are four kinds, minimum four kinds. There are more, but basically we are taking it as four types. In that we are having liquid funds, second one is hybrid funds, third one is debt funds, fourth one is equity fund. Coming to liquid fund, it you can invest it for like 10 days, 2 days, 5 days, but the profit or the percentage will be between 8 to 12 percentage. If anytime you want money back, then you can get that money within few days, or few, it might be 24 hours. Okay, similarly, if you are planning to invest in hybrid funds, hybrid fund is combination of debt and equity. First of all, I will tell you about equity and debt funds. After that, I will go to hybrid. Equity means basically the mutual fund brokers or mutual fund managers, they will invest 90% of their like shares in the share market, or it might be equity. Equity in the sense, in mutual fund they will be like invest in different kind of companies in the sense, let's take an example of Reliance, Bajaj Finance, ITC. It might be some FMCG, like it might be some chemical industries. They will diversify their portfolio by investing in the equities. Equities in the sense share market or share. Okay, 90% will be share, and minimum, and the 10% will be bonds. It might be some securities or government securities will be there. They will be investment on that. Similar wise, debt funds. Debt funds is the like fixed income funds. Fixed income funds means the fund managers will uh, like invest in the bonds, government bonds, corporate bonds, securities, treasury bills. They will invest on those, which is a secure investment. If anyone is new to investment, then they can choose the debt funds, which will give them less profit or less percentage. It might be 8 to 14 percentage, but they will be have a steady income. But if anyone is planning for equity, the high risk will be there, high profit will be there, as it is invested in equity. So we need to plan our fundings or plan our investment to diversify. Like if anyone is having 3,000, let's take an example of 3,000. One A is having 3,000, B is having 3,000. They want to invest in mutual funds. Then they should, what, A is planning to diversify his mutual fund funds, and B is planning to invest in a single fund. Then let's take an example. A has invested in three funds. One is equity, two is liquid fund, three is debt fund. Each he has invested 1,000 rupees, and B has invested in single fund equity. It sometimes it might be having loss. I am not saying equity funds, as I told you about high risk. high risk in the sense it might go down, you may get loss. So if B has invested in single fund, if it gone to zero, as he has invested 3000, so if it is gone to zero, then he will have zero income or he will have zero investment at the end. But if like A, who is investing on different diversifications, like he is invested on equity, he is invested on debt, he is invested on liquid funds. If equity has gone to loss, then he will have the debt fund and the liquid fund, which will give money in the longer run. So as per the diversification, he is in the profit, he is not in the loss. So every time or everyone, hello, is my voice audible?
Yes, audible.
Okay, sorry for the interruption. As I told you about mutual fund, I have I have given you example. I have given the example of equity, debt, and hybrid, and we will go for hybrid. Hybrid fund is the like diversification of equity and debt funds. Okay, so one can plan for diversification portfolio. ULIP means unit linked insurance plan. In that you will have a insurance as well as the like financial also, like you will get a funds and you will get the insurance. Hello, as I told you about ULIP, unit linked insurance plan. In that in ULIP you will having like funds. It might be some funds and it will be having as well as insurance. It will be a diversified of both the funds. Okay, and investment in shares, it means like investment in different companies. It might be Reliance, Adani Green, any of the companies. We will get some like we will get as a share, we will be as a shareholder and we can buy a share. The share price will differ. Okay, similar as a bond in the sense it will be for government, like bonds. It sometimes there will be corporate bonds will be there. Bonds means let's think, I am individual, I want some money to start a business. Directly we can't get it. So what I am doing, I am just planning to keep my securities and I am just taking the bond as a like loan from the government. Okay, after that, short term plan. In short term plan we are having two kinds, like short term FD and recurring deposit. Everyone know about fixed deposit and you might know about recurring deposits. In FD we are getting 5.5 to 7 percentage in returns, and in recurring deposit we are getting 3.5 to 5.5 in returns. Okay, so why I am showing all those things means we need to diversify our portfolio in the sense we should plan for long term, short term, as well as retirement plan to achieve the financial like freedom and to achieve our life goal. Okay, similar wise we are having different retirement plans for which we need to plan, as most of might have LIC, some like pension funds, NPF, EPF. These are the different funds which we are having for the retirement. So if we are having some investments in these funds, then we will not have any problems at the time of retirement. We will be having a like happy lifestyle. Okay, at the time the spendings which we require we will get from these funds which we save from now. Okay, so if you have any doubt on this, then you can ask me. If it is clear, then you can we should know before investing, the we should know the risk profile model. Risk profile in the sense the age group and how much he or she should invest in equity and other funds. Let's take an example. We are in the group of 20 to 30. Then mostly we should invest 40% of our income, not income, 40% of our savings. As I told you about, we need to save 30 percentage. From the 30 percentage we need to invest 40 percentage of our savings in the equities and 60% in the other funds. Equities in the sense it might be share market or it might be mutual fund. Other funds means it might be debt fund or liquid funds, or we can invest in FD and recurring deposits. Similarly, to age group of 30 to 60, they should like 60% of funds should be invested in equity and remaining 40% should invest in other funds like debt funds. And if anyone is 60 or greater than 60, they should invest 10% on equity and 90% is other funds, like it might be debt fund or retirement plan funds. Because if the age is greater than 60 or nearer to 60, then we should not investment more in equities. Okay, as we need funds from the investment to get our lifestyle or to achieve our life goals. So this is the personal risk appetite. Let's take an example, person's attitude. Like some will be there who will want to get a conservative plan. Conservative plan means they don't want to investment in risk, or they don't want to get high profits. In that case, we call that as a conservative plan or conservative persons. That is, if we want medium risk and some good in outcome in the sense interest. If someone is planning for 15 to 20 percentage, then that is called as moderate risk. We are planning to a moderate risk to investment some few money or bucks to get a medium income percentage of to interest of income. If anyone is planning for a higher returns, then they should take the higher risk. As I told you, equity have higher risk. They might give more than 100%. It might be 15%, but 10%. It is not a we can't assume it might be more than that. So if we are having any interest to take high risk, or if we are capable of to take high risk, then anyone can invest in high risk bonds or high risk mutual funds, or it might be share market. Now as anyone can invest in cryptocurrencies. Cryptocurrency or currency market is also available to invest in. That we will get high returns, but the risk will also be high. Direct exposure in the sense, let's take few or most of us, we don't know about these investment plans, or we don't have any financial planning for future. But let's take an example. If any of our friend is buying any share, or if any of friend is buying mutual funds, then he or she says us that it's better to deposit or to invest in this fund. Then blindly we are depositing or we are investing in that. But before investing in any of the funds or share markets, we should have minimum idea about the fund, how it runs, what is the basic of the fundamentals of the funds, how it rising, what is the 5 years back strategies, how it is running from 5 to 7 years, or it might be 10 years. We need to know all the background of the companies as well as the different financial experts. So we will be having a idea that in future, or in it might be 10 years or 12 years, we might be getting different kind of investment benefits. Okay, this is the life cycle and financial planning how we should need to do. Young adults should investment in career, and we should consumption and savings. Similarly, for family formation, like 26 to 36 age group, they should investment in debt funds, insurance, and consumption and savings will be similar for all the age groups. Like if we are earning 20,000, there will be minimum 10,000 or 5,000 will be consumption and savings. It might be 30% of the saving. So at that time we will be investment in career in the sense, we might take some course, we might uh, investment in ourselves, like personal development or speaking course, anything to develop ourselves and to achieve our goal in future. Similarly, for the age group of 36 to 49, we will plan for family development. At the time we will plan for investment, retirement plan, income tax will be followed for everyone. Like for family maturity also, for 50 to 60 year age group, investment is required, and at the time requirement, retirement funds will be also there, and income tax with estate. Okay, similarly for the retirement who is having 60 plus, estate and income tax will be followed on the age group. So this is the periodical review of the investor's profile. Like you need to know how much you are investing, how much you are saving. You should have a proper budget of yours, like savings, or it might be salary. How much you are earning, how much you are saving, how much you are like all the details you should have. We should have a proper like what we say, we should have a seat. It might be a seat. I will just show my seat so you can get a idea. Like I'm investing in share market, so I have created a data sheet for that, for which I am tracking daily how much I am getting, how much I am investing in that, what is loss or any profit I am getting. All the data you will be having. So when next time you are doing, or for the future, you will have a clear idea. You can see this Excel sheet of my budget, which I am investing in stock market. You can see I have invested 6631 in January month, and I have lost all the money. But important thing is not losing. We need to have a proper planning on our finance, so next time we can get profits. Profit is not a important thing, but planning and implementation is important, and the mindset to implement those things is the important part in our investment plans. You can see this February month and March month, I am investing, so I have given all those things in a periodical wise. So whenever I want to recheck, or if I want to go for more, then I can check and I can know those details, and I can have a brief idea where I am investing, which is giving me profits, which is giving me loss, and where I can investment to diversify my portfolio. Okay, this also we need to do to get a clear idea. So this is just about the webinar on financial planning. I think you might not be clear everyone, but I think minimum idea about the financial plan you have got. So if you will Google about the financial planning and what is the diversification of portfolio, then you will get some few more things. I am planning to create another webinar similar wise on the personal finance and more about the stock markets, mutual funds, etc., to give you a clear idea and to increase awareness among the for the personal finance. Anyone want to ask any questions? Then you can ask. The slide, like we are having less time. The Zoom is only providing 45 minutes, so we don't have more time. So if anyone want to ask anything, then you can ask quickly, so I will try to answer your question. I have planned for something more also, but due to internet connectivity, I was having like disconnecting from the screen. Sorry for those interruptions.
Completely okay. You're done superb. Yeah, that's a great knowledge. Thank you, Deepak.
Thank you everyone for your valuable time. If you want to know more about investment and different diversification plans, then
Thank you,
you
sir.
can contact me. Most of you might be having my number and email IDs. You can ask anytime. So I will give you some better options about the personal finance, which is most important in everyone's life. Don't take it like this is a webinar we have joined and we will leave. I have not done this webinar to just for my namesake. I have done this webinar to give you an awareness of the personal finance, how it will work, how inflation will work, and how and what is the importance of it. So you should not like leave this as a like normal thing. You should take it serious. You should learn gradually. I'm not saying you will learn in 1 or 2 days. You should start learning about the personal finance and different investment options, so in future you will not regret about that. Thank you everyone for your valuable time.